today. So that was a great thing. Okay. Now, the one thing that we have going on gold today is that you do have a 1440 that is oversold at the moment. Notice that there's no divergence listed here. There's no magenta peak listed here. So the only place to go on gold is down unless we start getting magenta peaks in, which we do not have at the current moment. Now, what's standing in the way of taking a short on gold? It would be your 12-minute ATR. That needs to be broken before I would be interested in taking this trade to the downside. Okay? Everybody understand that? Any questions on that whatsoever? Now, on crude today, before we even look at crude, we do have a crude oil inventory report, okay? Something to be very aware of today. They're also having the Euro group meetings today, and that can cause market spikes, okay? And that means it can spike either direction. Okay, we see that we did break out of the congestion area that we were seeing yesterday, and I'm going to try to enlarge this chart so you can see. We broke out of that congestion area. It went back to test the ATR last night during the European session. You did get an entry on that if you were trading the European session, and of course it did go down off of that. Now, the only thing that I can see this morning on crude is, again, you have a 12-minute that so far is holding price up, okay? This is, significant because I would want to see that ATR broken before I was interested in taking a short position on crude. Everybody understand that? It's really not a great idea to enter a trade when it's right at the ATR, okay? Let it break that area, okay? I would want it to flip it, Christian. And then depending on how it flips it, whether I would wait for a test of the ATR. Does everybody understand that? Now, it looks like it's going to go down. Everybody in go down, okay, because they think we're going to come over on crude oil inventories. Does that mean I'm just going to jump into a short position? No, that is not my trading style. It could come right back up here and test this white dot up here, the congestion dot, okay? Be patient. Much like we saw on crude yesterday. You see congestion here, congestion here. It's trying to break out of the congestion area. Okay, you see that on the 3-minute as well. It would need to break this ATR for this to continue up. Okay, and that's what I would be watching until it does. I'm not going to try to trade that. What problems are you having with the microphone? Is it going in and out or what? If it's my internet this morning, Christian, because just loading website was real slow, so it very well could be the internet. Can everybody hear me okay now, or is it still cutting out? Okay. Now, on the pattern with the indices, this same pattern I was seeing on the Dow this morning as well. I'll let it load before. Okay, the Dow's actually broken out to the downside. When I looked at it earlier, it was still in the congestion area. It looks like we may get a magenta peak here, which will make this retrace back to this ATR at 797. Okay, to do that, it will probably come down and test this ATR first. Okay, now again, I would want to see it break this ATR first and then come back to test. Okay, that would also ensure that we got the magenta peak over here. Does everybody understand that? And this is when, oh, you get excited because you're right on the cusp of making that magenta peak. So you get excited and you jump in early and then you lose money. Okay? Patience. The magenta peak needs to come in. Okay? This ATR needs to be broken, and that ATR is at 774. Okay? And it needs to get to about 776 for this magenta peak to form. Okay? So you're like 4 points away. Then you have to retrace over here. Okay? Does everybody understand this? And because we're at a market opening, it may just go up. Because what are you going to have that's going to fuel that move to just go up? You have the U.S. market opening. Do y'all understand that? And these are the hardest ones. When they're coming right at the U.S. market opening, they're the hardest ones to trade. Why? Because you have the opening volatility that's going to fuel this particular move. And they can take it either way, guys. They can take it straight up and it goes back to the ATR. And then they could take it straight down and come to this ATR. You have to watch it, okay? I don't think you're going to have a setup before 9:30. Everybody understand that one? And these are the hardest ones to trade. Let's get a look at the S&P 500. S&P 500, you still see this congestion area here on the 45-minute. You see the congestion area on the 12-minute. This one very much similar to the NASDAQ that we saw earlier. Okay? So again, until we break out of these congestion zones, I'm not trading this market. Not even on my list. Y'all understand that? Overall, I think it's probably going to go up. That doesn't mean I'm going to enter a long position. Okay? Big difference in that scenario. Okay, on the DAX, again, do you see this congestion area on the 45-minute? Do you see the congestion area over here on the 12-minute? Do you see the congestion area on the 3-minute? Okay. Is this a market that I want to trade? Hell no. I'm not even interested in this today. Why are we seeing the congestion zones, guys? You're seeing it across the board on most of the indices with the exception of the Dow. Why? It's indecision. Why is there indecision? Because Greek is making a lot of noise about it's not going to renew the austerity measures that they were implemented, okay? They're going to try to get funding. Plan B is to get funding from either China or the U.S. or Russia, okay? Would you really want to be in the market after what happened on the Swiss National Bank if a decision comes out and it says, okay, we're not going to fund Greece, it's going to go bankrupt? Would you really want to be in these markets? Me either, okay? And evidently somebody agrees with that, okay? Now, what market could you potentially trade? The only thing that I could potentially say that you could trade is potentially gold because we're all red on this, okay? It's now flip this ATR over here, let it retrace, okay? Then maybe, but you're going to have some issues. What are the issues? And it's coming from this time frame. There are some issues with that. What is it? Volume, okay? On these last three lows, that volume has been controlled not by sellers, but by buyers, okay? On this one, buyers stepped into the market, okay? I would be anticipating a potentially getting a magenta peak on gold, okay? Do y'all understand that? Now, you have got plenty of black space right in here. Do y'all see that? That's what I say. There's nothing in the way of a good trade. But what are you going to do? You're going to wait, let it retrace back to the ATR, okay? And then look at the volume, okay? And I would look up at the volume here to make sure that sellers are still controlling this bar when I enter. Do y'all understand that? On the indices side, I'm not even interested until after the market opens. If you're going to trade crude, okay, let's get crude back up. Number one, you have to be in the trade, in out of the trade before the crude oil inventories comes in. You don't have any potential magenta peaks over here. No potential magenta peaks here. You've got an ATR that is against you here. I just don't see your trade. Yeah, that's representative of this line right here, Dave. And this is what you see. If you're marking the congestion lines and you just keep them on your chart, Dave, you'll notice a congestion line will always coincide normally with the ATRs from the higher time frames or congestion dots from the higher time frames. Does everyone understand that? You know, for some reason, the 45-minute picks them up really well. Any questions on that at all? Well, again, it's starting to retrace down to the ATR. Again, this has not come in. That's what's preventing it. On crude, your CD lines on crude yesterday had a nice sweet spot from 52-ish to 50-40-ish, which it fell through like a knife in butter. Yeah, it did after it broke through that congestion area, Dave. This is the area that you're talking about. Um, I don't have one at 50-ish, and it's just probably because it's one that I haven't marked that was there previously. But, it went from here down, then retraced back to this ATR. And this, you said around 50-40. Yeah, that would have been here. And I've probably missed one. That's why it's not on there. And I still think it's probably going to come down to here. The problem is it could bounce off of this 12-minute, and that would stop you out down here very, very easily. It very well could be. I think I only have 10 days loaded on this one, Dave. And as long as price is moving within those lines, that's pretty much what I'll stick with. And that's really the way that I gauge it, is do I have lines above? Do I have lines below? And as long as I do, that's pretty much what I'll stick with. And I typically will start with 10 days. But let's say that we're at a new high or a new low, I may add days. I'll, start 15, 20, 25, 30 until I start seeing, lines. Now, crude, I think back about 2, maybe 3 weeks ago, we were at new lows. And it was new lows, that, I mean, we hadn't had lows like that in 8 years. And I knew that. So I didn't bother to add more days. I just waited for the congestion dots to develop. Does that answer your question, Dave? But you will find that these congestion dots will tell you pretty much where price is going. And when I see them like close together like this, I don't trade. When I see them far apart like this, yeah, I'm more apt to trade that. Does everybody understand that or no? The euro, George. Let me open that workspace. I won't be talking, so the workspace can open. Let me update the lines on this one, George. And literally, this is what I do. I keep my lines on it. I was actually, which one was it? This one this morning. Right here. Because it was about 3:45. I watched that one because this is the same pattern that we were speaking about yesterday. If you go back and you see, okay, here they put very little volume into it. Here they put a lot of volume into it, didn't go anywhere, and it went down from there, which is kind of what I anticipated it would do. You just had divergence here, so it should actually come down again. The only thing you've got holding price up is this little ATR over here on the 3-minute chart. I don't think it's going to do a lot. So when you draw your lines, do you consider whether price has passed through once before? Uh, you mean when I put the line on my chart? No. If I see a dot, I'm going to mark the dot, period. I don't complicate this. Does that answer your question, George? You know, from the looks of it, and let me put that down for a moment. You can see this is down, this is down, this is down. You know, I don't think this is going to offer a lot of support, especially since sellers just controlled that bar. It's just my personal opinion. And of course, trading is risky. You know, there's a nice sweet spot between here, you know. And I think this is being caused, George, because I think people think that Greece is going to be a problem. But again, that's my personal opinion. And if you're in this and something changes, hey, you could get hurt. All right, back and look at the NASDAQ. And let's see, is the 3:12 a.m. That's this one compared to the 5:36. 5:36. This bar? Oh, you're right. It's not the NASDAQ. Oh, yeah, my brain's working this morning. Okay. This is 536. I'm going to mark it so I can actually see. Let me get my little marker out. So we're going to compare this bar right here to the 312 bar, which is this bar here, I believe. Now let me go make sure of that. No, it would be that bar. So we're comparing this bar to this bar, and this one, we're going to make a straight line on. So volume goes up, and then volume goes down. Is that divergence? Are they going in the same direction? It doesn't matter. The pattern is going to be the same regardless of whether it's this one or this one. This one increases risk. This one is closer to the ATR. Is price and volume going in the same direction? Is there divergence? Yeah, I think it's the internet, Dan. Is there divergence? That is correct. And I'm going to tell you right now, if you're not drawing on your charts and you're trying to learn volume, but you are not drawing on your chart, you're not going to learn volume. It's that simple. You're not going to learn it. It takes a lot of drawing on charts to learn how to do something this simple. That's right. You have come back to test a high, so it's level on price bars, but the volume shows it's decreasing. It should have been at least level, at least, not going in the same direction. And what do I mean by drawing on your charts? Okay? It's not hard, okay? You have to know how to work your platform though. Okay, we're going to highlight the chart and we'll say, oh, it's coming back to test this area. I'm going to put a horizontal line on it, and I did. Then I'm going to say, okay, we have tested that line here, and it has came back to test it here. It has came back to test it here. It has came back to test it even more. Yeah, right there. Okay? Now, I've got them identified, okay? I just had to get rid of that one for a moment. And I can say, okay, what happened? Okay, from here to here, we increased. From here to here, we decreased. Okay. Did the price bars do the same thing? Nope, it's a straight line. Oh, that's divergence. Do you understand now? It makes you think through the process. That's why I tell you, draw on your charts. And if you are drawing on your charts, then this, if you don't get it, is what you need to send to me to say, hey, I drew on my chart like you told me to, and look, is there volume divergence? Because you can probably answer the question before you send me the chart. Why? Because you know what it is, but you're not thinking through the process. Do you understand that one? I'll show you how easy it is. And it really is easy, but it takes a lot of work to get to the easy. Okay? All right, now I'm going to use my little annotator because it's easier for me to use, quite frankly. All right, I marked my volume. Price is going up. Volume is coming down. Is there divergence? Yes. On the 180 crude, we have trend divergence for February 9th high showing the new low of move, having less selling than the earlier new lows. Yeah, I saw that. Also, trend divergence from February 5th low up to February 9th high. Easier to learn on a big chart becomes more obvious if I'm reading right. We'll go look at it. Let me change this real quick. Now, the thing of it is, guys, and I mean, Dave, George, all of y'all, pitch in. But if you're not doing this, you're not going to learn it. It really is that simple. You either put in the time to learn it or you don't. Let's see. Well, let me get all these lines off, and I've got to do it manually so I don't mess up my charts. No, I can do it on this one. It's the 12-minute. Okay. Okay. February high 9th. That's actually stopping volume right there. And you're absolutely correct. To me, I don't need to draw my lines. You're getting higher highs and lower highs in volume. Volume divergence. Okay? Oh, that's still in the NASDAQ. Crude's going to be the same way. But we'll go look at it. Just for the fun of it. Give us something new to do. All right. February 9th. This is the high from February 9th. And you've got higher highs, and what is volume doing? Lower. See that? And then you've got lower lows, and look at the volume. Now this one was substantial because there was no buyers come in on that bar. This right here said, hey, they're going to test for buyers. Look, no buyers came in. What does that tell you? Oh, it tells you it's going to go and probably take out that low. what happened? It took out that low. When it took out that low, so far, divergence. Do you understand? A lot of times it's easier to learn on the higher time frames. Well, I'll tell you what normally happens is you see these little blue ones right here, okay? But they're not higher than this one, okay? So then you say, oh, there's divergence. No, it's not. It's not higher highs. And that's the reason you should draw on your chart. Drawing on your chart makes you step through the process, okay? Yeah, it is trend divergence, Dave. And the problem with it, okay, you haven't had that reversal bar that we talk about, okay? I would want to see the reversal bar or what? An inside bar. And it's very important to have that on the trend divergence. That's what confirms the divergence. That's what's the difference between potential and this is confirmed. Remember on this one, that's a reversal bar. That confirmed that divergence. Okay? So far, now we're not getting strong on the seller side, but you have not had that reversal bar that says, hey, I can read it, and you haven't had the inside bar. Okay? We don't use that a lot, so it's easy to forget about that process. This was a reversal bar. You could have read it at the end of that bar if there was divergence. Okay? This is a reversal bar. If this had been lower than that one, then you could have compared it and said, okay, this is a reversal bar. It flipped to the upside. Okay? Otherwise, you have to wait either for the blue bar or the gray bar. Does that make sense to you, Dave? That is correct. And that's the one that we practiced a lot at the seminar because it's very important to have one of those conditions met for just that reason right there. Okay? You will come and take out the previous volume bar because there was not a reversal bar and there was not an inside bar. It's the difference between potential divergence and actual divergence. The difference between potential and actual divergence is whether you get the confirmation of the divergence. And that's something we worked on a lot at the seminars. Yeah. The seminars, we do a lot of drawing on the charts. Okay? I don't have natural gas loaded. So, would that be considered divergence on the 12-minute going down to the ATR? On the 12-minute? Are you talking about here? No. To me, that's not a good divergence, and I won't use that type of divergence. Yeah, they maintained their presence. That's the difference. There's a difference between, hey, I'm maintaining my presence versus there is no presence. That's the one that I don't like to use. And some people use it. That's, well, they're not getting stronger, okay? Sort of like, let's go back to the Walmart analogy that we used yesterday, okay? If Walmart can maintain 5,000 people coming through the door, okay? If they can maintain that traffic, they're probably going to get some sales. It's all about numbers, right? If sellers can maintain their presence in the market, chances are buyers are going to give up. Sellers going to win. It's about endurance. And the sellers are enduring. Buyers are not. Do you understand? Volume psychology, that's right. They're maintaining their position. And if they're maintaining their position, buyers are really going to have to come in strong to knock them out. Yeah, kind of like a pop. Well, since my son is going in the Army, hopefully anyway, he was half an inch over on tape yesterday, so I'm waiting on a phone call to find out whether they're going to ship him out or not. But one of the topics that we discussed yesterday is the endurance aspect of being a soldier, okay? And, you know, a lot of people compare what's going on with buyers and sellers as a war, okay? Sometimes wars are not won by who is the most powerful. Sometimes wars are won by whoever can endure the longest. You might go in with 10,000 men, you're going in strong, but they can't endure 6 months in battle. You can, just by outmaneuvering them. Hey, guess what? They're going to win. That's right. Same thing with buyers and sellers in the market. Who can endure? That's why I don't like that type of divergence. It's showing endurance. And I don't want to see endurance. I want to see what? Weakness. If you're weak, you can be overpowered easier than if you're showing endurance. Just another way to think about it, guys. Any questions on that this morning? Almost felt like I was a preacher there for a moment. Just kidding, guys. That's right. And really, that's what it's all about. And, you know, I know how hard it is to understand volume. I know how hard it is. I struggled with it. God, did I struggle with it. Okay? But once you get it, it's something that nobody can take away. You'll be able to feel that market. And that's what you need to do. You need to be able to feel it. You need to be in the zone. Yeah, you're exactly right. We had the endurance because we had the passion. Okay? It is a common sense. To me, anyway. That is exactly right, Dave. And you got to be able to read the signs from the bluffers. And that's what volume gives you, that aspect of it. That's why it works. All right, guys. I'm going to go ahead and I think I've said everything I can about what the charts are going to do this morning. Are there any other questions this morning? Hopefully, I will get this one uploaded quicker than yesterday. Now, I'm not having a trading room tomorrow morning. I've got an appointment. So, all right. And this is the last week to sign up for the seminar in Greensboro. So if you have not signed up and you want to, you'll need to do it before Saturday because I will take it down. And I'm thinking about going all online after this one. So it might be the last in-person seminar for a while. I like doing them online. All right, everyone have a nice day, and I will see you again next week, same time, same place.